with a big round of applause. So now I welcome our esteemed dignitary, Shri Pramod Srihari sir, to be escorted by the treasurer, Dhruva M of Sikasa.
Please give them a huge round of applause.
I request Dhruva to present a live planter to sir. Shri Pramod Srihari, a fellow member of ICI and insolvency professional, registered with Insolvency and Bankruptcy Board of India, partner of chartered accountancy firm Pramod and Darshan located at Bengaluru. He is an associate partner of Optimus Resolution and Restructuring Advisors LLP. He has been past president of Karnataka State Chartered Accountants Association, India. He has also served as the post of VP, Secretary, Treasurer, and Executive Committee of KSCAA. He leads restructuring, turnover, and corporate accounting solutions. Closely worked with an organization in the sectors of manufacturing, information technology, biomedical technology capital, and financial markets, logistics, e-commerce, real estate, FMCG, healthcare, etc.
He has also presented papers across various professional forums, contributing articles to the Professional Journal and business newspapers. Was a visiting faculty at Christ, Jain International, and New Horizon College. He is an avid speaker, avid reader of various books, and a Carnatic music enthusiast. With that, let's dive into the session. So we request the session chairperson to kindly give an overview of the session.
Good afternoon, everyone. We have a very interesting session which is exploring the uncharted area. Now, there are three things which has to be seen. One, when the audit was included as one of the profession some 20 years back, there was only one field called as audit. Eventually, audit segregated itself into something called as internal audit. Then they're called a specialization called as tax audit. Then we entered into something called as due diligence audit. So the exploratory of the same profession, which was audit, went into different segments of audit. And that's when people started realizing that while audit is a specialization, there is a super specialization within audits, like internal audits, due diligence, and all of them. This did not even suffice. While the economic activity went on moving ahead, we had a lot of this restructuring. Now, if you see the businesses, you'll realize that each time the new business enters the market, the old businesses are troubled with the new competition, and the old businesses will have to either revamp themselves or will have to extinguish. They will extinguish themselves and then move out of the business with an exit clause. So India had three laws. One was, how do we incorporate the company very fast? Of course, some of the laws which helped them was, Companies Act was there, which came in with a faster incorporations. There were MSMEs, which allowed, allowed people to incorporate faster. And then there were, government started giving startup funds, so there was incorporating it faster. That encouraged incorporating. How do we manage these companies? There, again, Companies Act was there. There was Competition Commission of India, which came in CCI. These all help the companies so that they can sustain in the market with the competition. The third one also which is required was on the exit part of the company, which is once the company don't do good, what do we do with them? Do we retain those companies in the books as is, or do we throw them out of the registrar? That's when the exit of the companies came in and the adaptability to the new way of doing it. That's when we called, can we give a faster exit to them? That's when the insolvency and bankruptcy came into the picture. For example, Byju's, which is once celebrated as a $22 billion company, today is surviving its existential crisis. In the next few months, we will know whether Byju's will exist as Byju's or Byju's will have a chapter called as Learning from Byju's in their own books. So we are entering the new era of new ways of doing. But how do chartered accountants adopt to these learnings? Can they still do only the golden rule of accounting and be the accountants? Or can they do better and adopt those learnings and then become better? For example, in the Byju's case, who can do valuation better than chartered accountants? Correct? When $22 billion it was valued. One. How do we say there is a stress? Who decides what's a default? Who decides what the promoter should do once there is an insolvency and bankruptcy code? These are all the exploratory areas. CS are far better equipped. This is on the exit side of it. Let's look at it from the side of dispute. You cannot say that business will stay away and immune itself from disputes. Disputes are part and parcel of business because that's how the economic activities move. But if you let the disputes stay as they are, and if you let the courts decide the dispute, you are only consuming time. People today don't have time. They need to move faster and faster. Correct? So is there an alternative way other than courts? Is there alternative way other than courts is what we are seeing. That's when this alternate dispute resolution now comes into picture. That's when the arbitration comes. Some of the countries which have explored this and have mastered this are Singapore and London. They are the world's best alternate dispute resolution mechanisms. That's why business thrives there. When dispute happens, can you adopt itself? That's the one. The third one is the new set of thing which we call as ESG, climate change. I'll tell you a few things. People thought that having capital, efficiency, management would be a successful businessman. Today, it is not so. Today, climate change is also an equal portion of business success, correct? What happened in Coorg? One rain can close all the resorts in Coorg with a landslide. One rain. Okay? One cyclone. All of them can close. Now, there are two challenges to it. One, the existing businesses can be closed because of the climate change. One. Second, if you adopt the new ESGs, if you adopt the new ESG policy and allow only the sustainable businesses to come in, what will happen to the older ones? For example, if you say all the chemical manufacturing companies do not manufacture a chemical, how will you have a paint manufacturing which will only depend upon chemical in it? Correct? They can't sustain. How do they sustain the new ESG? So the world is getting extremely interesting. There is a new order which is coming up. So even if you see recently what happened in Baku, which is on the climate thing, was the world wanted to fund the developing nations have a problem with the developed nations that you did all the carbon print when you had to develop. Now you are developing. Now you are giving us the gyan. And the second thing, while the China manufacturers, it is not China's carbon output, but it is the output of Europe because the goods are exported back to Europe. So who is going to take this into account? There are a lot of interesting challenges which are coming in. This is the country level. Then how do you adopt it to the business? Because business is one of the greatest stakeholder in the whole journey towards ESG sustainability. Correct? So you have got three interesting topics. You should be extremely thankful to SICASA for doing this because this is an unexplored area. One. So you should now thank SICASA for it by clapping. Second, for the CA Institute to let you know that there is an area which is other than audit if you are not a person who is always into ticking. Okay? We've got three speakers. I'm sure we will go through them each one by one and we will summarize it at the later. This is what I wanted to start the session with.
Thank you, sir. Now I would like to invite our participants, Lavish R. Singhvi, Shruti Kulkarni, and Prajanya Acharya. Please give a big round of applause. Now I request Dhruva, the treasurer of SIRC Bangalore, SICASA Bengaluru, to present live planters to the contestants.
With the tone being set, now let's invite the first paper presenter, Lavish R. Singhvi. Please welcome him with huge round of applause. All the best.
Hello. Yeah. So the topic which I'll be presenting is that arbitration, the role of technology, the future of online dispute resolution. Before going into the topic, let's play a quick game. Let me explain you the rules of game. There'll be a photo displayed in the PPT. Example like this. RCB fans in the house. Well, you have to guess the movie name. Example, this movie is KGF. Okay? So let us continue the game. The question paper was too easy. So, my dear ladies and gentlemen, if you have seen in all these three movies, it is related to the court, related to the cases, related to the law. In the same way, in India, there are more than 4 crores of cases pending in the district court. There are more than 1,80,000 cases pending, which are carried forward from past 30 years. And there are more than 5 crores of cases pending in India. And to handle those 5 crores of cases, there are a shortage of 70% of judges. So, even the court is trying to tell that we don't have that much judges only to handle those cases. How can you expect us to solve a case, to solve your case so efficiently? That's why the concept of ODR was brought into the picture, which means online dispute resolution. The way first we had physical classes, now we have online classes. The same way, in the before days and all, people used to go and solve the cases in the court. But now, through online, through technology, you can solve your cases sitting at your home itself. Let us understand in more detail. So I hope we understood the topic of online dispute resolution, everyone. I hope you all understood. So let's move on to the next topic, that is the arbitration. What is the meaning of arbitration? So there are two terms. One is arbitration and one is mediation. Let us understand one with a funny example, one with a real life example, one with a business example. So what is mediation? Assume there is a guy Lavish and there is his girlfriend. Okay. So guys, assume, imagination has no limits. So friends, assume there is a guy Lavish, he has his girlfriend. It was his girlfriend's birthday. He forgot to text happy birthday to his girlfriend. His girlfriend filed the case to the court. So what happens in the mediation is that the court will try to combine both the parties. The court will try to resolve the case. The court will not try to bring war between both of them. The court will tell that, okay, Lavish, you and your girlfriend, you both had a fight, now become the one person. So that is the meaning of mediation. Now let us understand with some real life example. Assume there is a client and there is a bank. The bank gave loan to the client at the rate of 10% interest. But due to the business losses, the client is unable to pay the 10% interest. So the case is filed against the client, and the judge will tell to the client that it's okay, you're not able to pay the interest of 10%, you pay the interest rate of 5%. I will make sure even the bank agrees it. So what is the common thing which we learn about mediation is that the court is trying to resolve the case as soon as possible and make sure that the both parties became one, and the case is being solved. Now let us understand the meaning of arbitration. Arbitration is completely opposite. Now what happened is that it is Lavish's birthday, but his girlfriend texted happy birthday. Instead of my name, she texted some another name. So the case completely changed off. So what happens in arbitration is that the court has the right to decide who is right and who is wrong. In this case, my girlfriend was wrong. So she should be given injustice. And I am right, it means I should be given justice. Now let us understand this with a real life example. So assume there is a client and there is a bank. In the same way, bank gave a loan of 10 lakh at the rate of 10% interest. But the client is unable to pay the interest due to some business losses and all. So what happens in the arbitration is that the court has a right to decide that bank, you're right. It's the duty of the client to repay the loan within the due date. So the client should be punishable under the law, and the bank should be given the justice. So this is the meaning of arbitration. So I hope you all understood the meaning of arbitration and mediation. Yes? So let's go on to the next topic. That is how arbitration works in a business. Assume there are two companies, company A and company B. Company A may be Romeo, company B may be Juliet, for an example. Okay, so what happens is that they both company try to launch a factory. They both company have the 40% market share. They think if we both come together, we'll have 80% of the market share. So they both plan that let us launch our own plant and machinery. And company A tells to company B that you make all the payment, I'll make the payment later. So what happens? Company B does all the payments, all the documents and all. But company A runs away. So in the cases like this, arbitration is needed because the court will have the right to decide who is right and who is wrong. And company A and company B, so there are several disputes which keeps on going in the real life. In order to solve those disputes, we need arbitration. Next, but as a CA student, why am I speaking about arbitration? What is our scope in a CA life, right? So arbitrator can be only a person who holds a degree of LLB, or else what is the degree of LLB? Because arbitrator can be a LLB because he have a right to decision to take who is right and who is wrong. But mediator can be only a chartered accountant because since our articleship days and other things and all, we learn to manage several things and all, right? So our job as a CA and as a CA student, those who become the mediator, we just have an opportunity to resolve our cases. We can't judge that you're right or you're wrong. We just can tell that, okay, you both have some legal disputes. I have a documentary evidence. I'll try to resolve the case as soon as possible. So mediator can be only a chartered accountant. But there are certain terms and conditions so that mediator can be a chartered accountant. First one is that he should be the resident of India. Second one, he should not be punishable as per the act. Third one is that he or she should have a membership number. So these are the basic conditions if a chartered accountant wants to be a mediator in the online platform. Next, let's understand how does technology works with some question answer and interactive session. We have to complete our exam paper within 3 hours. Yes? In the same way, assume one client is in Bangalore, one client is in Delhi, and the case is going on. They have to come to a mutual place, example Mumbai. It means the time is been consumed, right? So what happens in ODR is that I'm sitting at my home, my opposition is sitting in his or her home, and the court is sitting at their home, and we all are sitting in our home, and the cases is taking place online through Google Meet or through Zoom and all. So in that way, the first thing is that the time is being saved. The next question, do you believe that online classes were successful during the COVID or after COVID? Yes? So in the same way, if you have seen in the movies that the court gives so many dates, like Tariq pe Tariq, you might have heard in some Hindi movies, right? So what happens is that the court keeps on delaying the cases like 1 month, 2 months, 3 months. But what happens in online dispute resolution is that within 10 days, the next hearing will take place. Like example, today I filed a case. Within next 10 days, I'll have another hearing. After that, again, next 10 days, I'll have a hearing. And within a span of 3 months, the cases will be solved. If there is no major disputes in the clients. You have to pay your registration fees to write your exam and to attend this conference. Am I right? So in the same way, what happens in real life cases is that, assume I have to pay a fees of 1 lakh to the court, to the lawyer and everything, including. But what happens in ODR is that is the online dispute resolution, you have to pay only 50% of your fees. Assume I have to pay a fees of 1 lakh, including stamp duty charges, the lawyer fees, the other documents and all. But since everything is digitalized, it is online, it means I have to pay a less fees because there will be no physical process and all. So another thing which we learn from the benefit is that the fees. Have you all filed your GST return at least once? Yes? So there are certain documents which you need to file if you want to file a case. As we have a format of a balance sheet, in the same way, we have to go into the Google www.sama.com or www.odrplatform.com. You have to create your login credentials, and then you'll get a login ID like this, your email, your access and all. You just have to log in, and you'll get the current status of the ODR platform, what is going on in and around the world. Then, after that, the way in a balance sheet, we have certain formats like assets, liabilities, which item we have to put where. The same way, there will be an Excel. In that Excel, there will be certain documents, like you have to mention your PAN number, your Aadhaar card, what is the dispute, your digital signature and all, you have to upload in that Excel. And once your Excel is been filled, you have to file a case, like upload the Excel. Once your Excel has been uploaded, you have an option to choose 2 things. One is arbitration or one is mediation. Once you select these things and you upload your documents, then the case has been filed, and within the next 24 hours, the online team will contact you that what is your legal dispute, when can we have the hearings. Next, do you use Instagram all day by internet or Wi-Fi? So it is easy for us to use Instagram, but in the initial stage, I felt very hard. In the same way, ODR, if you just go into your home, once you go to reach your home, just search www.sama.com. You'll get a ODR platform. the platform might be a little bit technical in the starting days, but you just use through 2 or 3 times. You'll feel so comfortable, like you are using an Instagram. So it is a easy access and a user-friendly. So these are the certain statistics that there are more than 35 lakhs of cases solved in India. There are more than 2 crores of cases registered in the ODR platform, and the lower legal charges are very, very less. And with the proper ethical laws and requirements, the cases are being solved, and the easy accessibility, like anyone can easily access. Now we completed the 75 to 80% of our topic, that is arbitration, the technology, the online dispute resolution. Now let us understand the future. I don't have any future because I'm giving attempts, but they have certain future. Like example, if you just go into the ChatGPT, you search anything, you'll get the answer. But if you search anything related to law, you'll get the one sentence that in the second, however, please note that I am not a licensed authority. So if you want to use any AI software for your business or for your company, which is related to the law, which means you have to take the permission from the court, from the central government, from the state government. Because what if someone misuses AI? What if there is a threat in the AI? So the future of AI is that AI assistant will be launched in the next 5 to 10 years, so that the people who want to file the cases, they can easily chat with the AI assistant. Next, AI documents creation. If you go to the ChatGPT and search, create a GST notice, you'll get a format. In the same way, in arbitration, what happens is that people want to create the letters, the documents and all. But AI assistant, what will happen is that there'll be a particular format. Like example, this is a particular format. The same format will be given to all the what we say disputes, the legal parties. They can just replace their name, their case and all, and they can submit the documents. So AI will help to create the documents, but at the same time, we should make sure that the AI doesn't create any threats. Next. AI voice assistant. I don't know how many of you have used AI voice assistant, but you might have used Siri or Google Voice. Like if you tell something, they will pronounce it back, right? In the same way, AI voice assistant is not yet developed in India in that too hype, okay? So what happens in AI voice assistant that if I tell something, this is my dispute, how do I register? So the AI, the mobile or the laptop, it will respond that you have to register like this. So just by speaking from you to your computer, you can solve the cases easily. So with this, let me conclude and let me tell you that why we are speaking about the online dispute resolution. What is the scope? Let me tell you once again. As a chartered accountant and the future chartered accountant sitting over here, we don't have our, what we say, profession just limited to GST or income tax. Our profession is beyond that. We can even do this ODR works and all. But we think that our work is only limited to accounting, GST, taxation. We can also be entrepreneurs. We can also be other things and all. That is the reason we have the ODR as a technical session today. With this, I would like to end my presentation. Keep smiling, keep shining. Regards, Lavish. Thank you.
Thank you, Lavish, for such a wonderful presentation. Please give him a huge round of applause. Now, moving on to the next paper presenter, with huge round of applause, please invite Shruti Kulkarni.
Successful people have a responsibility to make this world a better place and not just take from it. Warm wishes to all the delegates present here. I am Shruti Kulkarni from the Hubli branch, standing before you to present on this wonderful topic, CSR and ESG, understanding the distinctions and synergies. Before deep diving into the topic, let us understand each of these terms. CSR. It stands for Corporate Social Responsibility. Let's go word by word. Corporate. It refers to a large firm or a large organization. Social. It refers to anything that is related to the society. And responsibility refers to the fact of being accountable for a particular something. So, CSR refers to the initiatives and the activities taken up by the company as a responsibility in order to have a positive impact on the society. Picture this, the company as a big tree, and CSR is the shade providing shelter and comfort to the society. Who is CSR applicable to? CSR is applicable to companies in India with number 1, net worth of greater than or equal to 500 crores. Number 2, turnover of greater than or equal to 1,000 crore. And number 3, net profit greater than or equal to 5 crore. Any company that fulfills or surpasses any one of these 3 limits has to compulsorily implement CSR activities. Let's move to the other side, that is ESG. ESG stands for Environmental Social Governance. It is a framework that helps in evaluating the business's sustainability and its ethical impact. It is made up of 3 major pillars. The first one, environmental, how the company impacts the planet and the environment. Number 2, social, how the organization impacts the society and the people. And number 3, governance, how the organization is being governed. This aspect includes transparency, regulatory compliance, and decision making. Basically, ESG is providing a framework for responsible investing. Let's now get to the main discussion of this presentation, that is key differences. The first aspect of difference between CSR and ESG is focus. CSR majorly focuses on philanthropy, compliance, and community welfare activities, while ESG majorly focuses on business sustainability, risk management, and investor reporting. The second aspect being applicability. As discussed, CSR is applicable to the companies that fulfill either one of the 3 limits, and this is set by the Companies Act 2013. While ESG, on the other hand, is voluntary as of now. But there is a catch. Investors today are expecting the companies to comply with the ESG framework. The third one is stakeholder. Before getting into this, let us quickly brush through what is the basic difference between shareholders and stakeholders. Shareholders are the people who have invested a certain amount in the company, while stakeholders are the people who are impacted and influenced by the company's decisions. So, the major stakeholders of CSR are local communities, government, NGOs, etc. While ESG's major stakeholders are investors, regulators, shareholders, etc. The fourth and the most major difference between these 2 frameworks is measurement. CSR, as we all know, is very qualitative in nature. It is not data-driven, and it does not have a standardized metrics for measurement. It is usually dependent upon director feedback, employee feedback, case studies, etc. On the other hand, ESG is majorly quantitative in nature. It is data-driven and it has a standardized metrics. It involves things like carbon emissions, waste disposal, etc. Now, think of CSR and ESG like this. CSR is something, CSR is related to things, CSR is related to what a company does for social good, while ESG focuses on how well the company performs, especially in the matters of sustainability. Let's now understand why these 2 aspects are so important for a company to implement. Importance of CSR. The major one is brand reputation. A company with a good CSR has a good brand reputation. A good brand reputation gives you a trustworthy and loyal customer base. A loyal and trustworthy consumer base builds a community impact. And all these 3 factors fosters employees' engagement in the organization and its working. When all these 4 aspects are well merged with each other, the company has a differentiative edge and a competitive edge in the market against its competitors. Coming to the importance of ESG. ESG is most importantly required by the investors and the regulator. Why so? Because it provides a better picture about the company's risk management, transparency, and decision makings. So it also helps the company in gaining a competitive advantage and influencing major investment decisions and corporate valuations. So far we have discussed about the definitions of the two, applicability of CSR in India, key differences between the two aspects, and individual importance of both these frameworks to an organization. Let's turn the gear to the synergies between these two aspects. The first synergy being enhanced reputation. Both CSR and ESG help a company gain a good brand name, brand reputation, and this in turn will help the company gain a loyal and trustworthy consumer base. Second, increased investments. When both these aspects are aligned with each other, it helps the organization attract the investors who are looking forward to responsible and sustainable companies. Third, improved risk management. With the help of CSR and ESG, the companies can have a proactive approach towards the environmental and social risks and mitigate such risks at early stages. Fourth, operational efficiency. We have been talking about sustainability and societal well-being. So both these aspects help in resource optimization and can also lead to cost savings to the organization. The fifth and the most important aspect of synergy between these two is competitive advantage. The company now has a good brand reputation. It has increased investments. It has good risk management procedures, and it is operating effectively and efficiently. So all these factors together helps the company gain a superior competitive advantage against its competitors in the market. Let's shift gears and look at how the future of ESG is going to look like. Number one, increased regulation. Currently, the regulations regarding ESG is not very stringent and strict, but in the coming days, it is expected that the regulations, especially in regards to the matters of reporting, is going to become more and more stringent. Second, investor pressure. Currently, ESG is not mandatory for all the companies, but investors and regulators in the future days are definitely going to look out for companies that have ESG associated investments running in their organization. And the third one, technological advancements. We all know that yesterday's technology is obsolete today. That's how fast technology is changing today. So technology plays a very critical role in measuring, reporting, and managing the ESG factors. Before going to conclude, there is one question that needs to be addressed here. Why was ESG even introduced when CSR was already existing? Firstly, CSR majorly focused on activities like philanthropy. But ESG, on the other hand, threw light and focus on environmental and social issues. CSR was not data-driven. That is where it couldn't give 100% transparency about the company's matters to the investors and the regulators. That's when ESR came into picture, because it is data-driven and it has a standardized metrics. It provided more transparency and provided more information to the investors and regulators to take major decisions regarding to the company. So ESG is an area which is unexplored, untapped, and uncharted for all of us future chartered accountants. On concluding, it is very important for each and every company to understand the distinctions and the synergies between these two frameworks and align them in such a way that the company enhances the social impact and gains a higher step on sustainability, because sustainability today is not about doing less harm, it is about doing more good to the society. Thank you everybody for your patient listening.
Thank you, Shruti, for shedding such insights about ESG versus CSR. So, with huge round of applause, please invite the last but not the least contestant, Parjanya Acharya.
Namaskara, Bengaluru. How are you all doing? Wow, let's take a look at something that's not trending on Instagram. All right, presenting to you the Insolvency and the Bankruptcy Act. Right, that's not something that we look at every day. It's neither not a very glamorous topic, right? But it was very needed for the India's corporate sector. They desperately needed it, right? Imagine this. Imagine before the IBC, if a company went broke, it was like getting stuck in peak hour traffic in Silk Boat Junction. Long, frustrating, nowhere to go. Well, before the IBC, creditors ran circles, stakeholders lost hope, and businesses were left to rot. Well, creditors were just like students, right? When students actually give notes to their friends but never got them back in return. So let's take a look at what we have in store for you here. We're going to be talking about what is IBC, how is it relevant for you guys, its success stories, some not so successful bits, and how we are going to progress moving forward, right? Oh, and I promise to keep it fun and easy to digest, no corporate jargon overdose ever. Well, before I break this down for you and make this into a more legal textbook, right, it becomes really important for us to understand why IBC is here. Well, IBC is like hitting the Control-Alt-Delete on a failing business, right? IBC has given companies a chance to reboot itself, maybe by restructuring their debt or finding a new owner. Well, liquidation is always plan B. Well, here's what IBC has in store for us. Time-bound resolutions. IBC says 330 days, no excuses, no deadlines. It's like setting a timer on instant noodles, right? You know when it's done or it's ruined. Stakeholder protection. Well, creditors like vendors, suppliers, and even home buyers like both of us. We know, it becomes really important for creditors to kind of intimate or kind of have that initiate settlements with the companies, right? So as creditors, we'd want to initiate insolvency proceedings against the company. It's like when your girlfriend says she's not hungry, but ends up eating half of your fries anyway. Well, resolution is way better than liquidation, guys. It's not all about selling off assets, right? It's about making the company thrive. So insolvency and bankruptcy code is more about having a good rehab for the businesses rather than a breakup. But why does IBC matter? We're all, 20 old something. Why should we care about a legal framework? Well, it's changing the dynamics of India right now. And trust me, it's going to affect everyone, even including those of you who are here just for the lunch. Well, faster resolutions, right? Before the IBC ever came into picture, resolutions used to take, 4 to 5 years. Every company roughly used to take 4 to 5 years to actually have their cases sorted. But right now, when the IBC is here, cases are resolved much earlier. Even though a lot of cases take more than 330 days, it's still a huge improvement. Improved recovery rates for creditors. Well, banks recovered more than 3.8 lakh crore because of their NPAs, right? It was like a much needed energy drink for the banks after handling such NPAs on their balance sheet. Well, recognition of home buyers as financial creditors. Well, IBC set a clear set of guidelines, right? Financial creditors paid first, then operational creditors get paid, and eventually shareholders. So the process was set, and everybody knew about it. Well, home buyers like you and me were included under the IBC, right? So example, if your builder vanishes out of thin air tomorrow, you will not have to cry over the foundation stone anymore. You have all legal grounds to go all out on him. Boost to India's ease of doing business, right? India was way below. India was way lagging behind when it came to the ease of doing business. But after the IBC came in, India was ranked from 136 to 52 in the resolving insolvency category. Well, before the IBC, resolving insolvency cases with companies was like waiting for a text back from your crush. It may take months, it may take years, but it may never happen at all. Next slide, please. Next slide, please. Well, Byju's, I'm sure most of you have heard of Byju's, right? It's a well-known name in the industry. Most of you have probably heard of it. Most of you have probably ignored when their ads usually popped up on YouTube. Well, Byju's was an edtech leader, right? And well, it was like how most of the companies stumble. Byju's was one among them, right? It hovered through rough financial waters. It was struggling with debt, mounting legal issues, and declining valuations. Well, let's see what really happened in Byju's, right? When Byju's actually came in, it was during the pandemic when the company usually shot up. And it was majorly due to the rapid adoption of online education in India during the pandemic. However, Byju's, its valuations kind of soared up. But however, Byju's ended up spending excessively on acquisitions. Like it acquired Akash, it acquired Great Learning, which again had sky-soaring valuations. Well, it had overly leveraged itself with up to over 1.2 billion US dollars, right? And it had to service the loan, right? And for it to kind of service the loan, it had to make revenue. And because of the pandemic, its revenues kind of shot up. But after the pandemic, the revenues kind of normalized, and even the online education kind of normalized. So it kind of lost massive amount of traction. Well, the IBC stepped in, and it basically told three things. Well, let's go through them in very briefly, right? It provided a structured framework for resolution. It established a clear process for creditors to kind of initiate claims. It also made sure that Byju's had transparency in the financial disclosures and the operational management in distress, because it's usually during the times of distress when companies tend to skirt the law. What IBC also did was it actually appointed an interim resolution professional to negotiate between the Byju's and the creditors, enabling business continuity, right? IBC made sure Byju's actually retained most of its workforce, thereby preserving a hell lot of jobs. It made sure Byju's actually maintained operations while restructuring its debt so that both the creditors and the stakeholders could benefit. Contribution to the edtech ecosystem. Like I said, Byju's was a major player in edtech space, and its contribution was invaluable at that point in time. Facilitating creditor confidence. Like IBC made sure that they prevented all kinds of arbitrary settlements between Byju's and its creditors. What they also did was they also standardized a legal mechanism for creditors to initiate claims over the company. And obviously, IBC also made sure to kind of increase the confidence among the investors, because Byju's was a massive success with respect to the startups, right? Great founders, great space to actually invest in. However, after the business tanked, investors had to be instilled with confidence, and IBC did exactly that. Well, next up is what we have, Videocon. I'm sure most of you are unfamiliar with this, for those of you born in the 2000s. So let me just set the scene right now. Videocon was a major player in the consumer electronics, right? Think of it as having Videocon TVs, refrigerators, and washing machines in literally every Indian household. But fast forward in 2018, right? Videocon was neck deep in debt, owing to a massive 64,000 crore, which eventually Vedanta, company which most of you are familiar with, took over the company for what, 2,900 crores. It's still pennies on the dollar. So let's see what actually went wrong with Videocon, right? They over-leveraged. They acquired massive amount of loans just to get into capital-intensive industries. They expanded aggressively. They went into sectors which were completely unrelated. For example, oil and gas explorations. Along with this, declining performance in core businesses, right? They lost market share to competitors like LG, Whirlpool, Samsung because of increased competition. Failure to innovate. When tech innovation was at the forefront of everything at that point in time, Videocon failed to innovate anything. Brand devaluation. Well, Videocon lost the competitive edge to its competitors, thereby eroding in the brand value as well. Well, here's where the IBC shined. Quick and fair resolution was something that was brought up by the IBC. Well, they also avoided prolonged delays, and under the Vedanta Videocon merger, Vedanta made sure that the asset lives of Videocon were given a new lease, so that they can at least salvage some value out of it. Well, let's crunch numbers for now. I'm not going to make it look like a math class, right? Over 6,500 cases were admitted. Over 3.8 lakh crore were recovered through NPAs. Well, there was a massive reduction in NPAs from 11.2% to 5.85%. And again, 37% of the cases were liquidated. Liquidation is like when one of us usually backs out of a group project, right? It's usually messy, but then we can't help. Nobody can help it. But what are the hurdles, right? Like I said, insolvency and bankruptcy code is not all rainbows and recoveries, right? There were a lot of delays in resolutions. Well, I said, you remember I said the 330-day timeline that the IBC had given the companies. Well, over 75% of the cases took way more than 330-day timeline. So it's like you're in an argument with your girlfriend during like a pre-breakup kind of thing. Low recovery rates, right? Almost 40% of the money was what was recovered actually in real. It's like you ordering a huge pizza from Domino's, but you end up getting only 2 slices. Liquidation over resolution. Most of the companies were liquidated and overburdened NCLT, right? NCLT has a very limited number of benches with them, and the cases were, NCLT was literally swarmed with cases of insolvency. Well, as a way going forward, it's really important for us to understand how we can make IBC a better place for everyone, right? It's important for us to actually know that strengthening NCLT by adding more tribunals makes it really easy for handling cases. Expanding something called a pre-packaged insolvency cases, which is right now available only for the MSMEs. I think it should be available also for the corporate clients. Well, it's really important for us to have streamlined litigation, right? Reducing unnecessary appeals and litigations. And coming to the last, better asset valuation. It's up to the chartered accountants to value the assets and extract the maximum value out of it so that the creditors can get paid efficiently. Well, let's bring it home, guys. IBC is a game changer for India's economy, from streamlining resolutions to protecting stakeholders. It has helped the economy recover billions of rupees. Obviously, like I said, it's not all rainbows and recoveries, right? It has a lot of delays, low recovery rates, and overworked tribunals were always a challenge. But for next gen, it's really important for us to know that IBC is trying to create order in the midst of chaos, and it has made sure that no matter what happens, resolution will be resolved, either the companies or your failing group project, of course. So thank you so much, ladies and gentlemen. It's been an honor and a privilege for me to be presenting here. Thank you so much for all the Sikasa volunteers here. I hope you have a wonderful day ahead. Thank you so much.
Thank you, Parjanya, for such a wonderful presentation. Please give him another round of huge applause. Now, we request the session chairperson to kindly summarize the entire session.
I would probably put it this way, that the exploratory thing which chartered accountants can do in this generation, in this time, is phenomenally high than what it was 10 years back. So if you are in a course which has so much opportunity, which is just not audit, moment you are a CA and you go and meet your friend, the first thing he is going to ask you is a doubt which is relating to tax. And much of the tax related doubts he is going to ask is obviously ATC or new scheme or old scheme or a new scheme. These are the only 2 things he will ask. But we have moved far beyond that, and these 3 sessions or the topics is something which you all can explore, read through them, because it is as much as new for you, so much as new for the industry as well. Okay? Both arbitration and IBC is something which I follow very closely. I give a very small example that if at all you are supposed to order something, I mean, I'll just give an analogy of why I'm saying so. Today, if you order something in Flipkart, you have 2 options to make the payment. One is you can do online payment or you can do a cash on delivery, correct? And the Flipkart or the Amazon or the any quick commerce would still deliver, presuming or having a positive note that when the goods is delivered, you're going to recover the money. But this is not an attitude which they've got it now. There were circumstances in India where when the goods was delivered, the delivery boy were beaten and the money was not paid and the goods were taken. We were a country like that. But we have improved from there and the behaviors have become better. Now, this is one example which I am giving to B2C, which is to the customers, right? Look at it from B2B. You are a manufacturer. Somebody from Jaipur calls you and says, can you deliver 10 boxes of whatever item which you are producing? And he will say, I will do a cash on delivery. Would you deliver that? You wouldn't deliver it in India. Why? Because you are doubtful whether the gentleman would make the payment. This is not because of Jaipur. This is a problem because it is between two B2B transactions. We do not have belief. And even let's suppose he does not make the payment, what is the alternative recourse to it? You will have to go to the courts. Okay, you go to the courts and do what? Feed the advocates. And then you will neither get the money from advocates, neither you will get the goods which you sent to Jaipur. Both of them will not come. So what is the alternative to such of these disputes? There we need a separate mechanism. One was what we call as an ODR or an arbitration, wherein can we go faster? Can we do it sooner and then go there? So as chartered accountants, they can be involved and the clients can be shown the route and mechanisms as to recovery, can go to the alternate disputes. One is a dispute, second is a recovery. Recovery and disputes both are not same, but all the disputes of course are only from financial reasons. There cannot be a marital issue in a business. So we are always talking about finance when we talk about business. This is about arbitration. And the second, if you come to insolvency, if you go, the best example, the Bangalore's learning case has been Byju's. Byju's was one of the sponsors for BCCI, if all of you know. Okay, when we were all in COVID, you had seen Indian jersey used to have Byju's on there, Virat Kohli used to wear it. They defaulted 158 crores to BCCI. That's when BCCI pulled them to NCLT and said, you either make the payment or I am going to file a petition for an insolvency against you. And the best part is, the Byju's did not even make the payment. Once the case got admitted, then they wanted to make the payment. Once the case gets admitted, no, then you can't make the payment, because if you set a precedence like that, then everybody will say, go file a case, once it is admitted, I will make you the payment. So they did not do that. It is not even the 3.5 lakh crores which he said is recovered, is after it was admitted and resolved. There is 15 lakh crores which was resolved because people wanted to withdraw the case once I filed. So if somebody does not pay me, I will take him to NCLT and say insolvency against him, automatically the payment comes to me and I will withdraw the case. So the best part of IBC was that even without admission or post-admission and without even resolution, the resolution can come in because the parties will start behaving better. So can you ask people to behave better by not forcing and then still pushing a lot of, without even strengthening the courts? Don't create hurdles in the courts, or don't put too many cases in the courts, but still get a recovery. That was one case. And third is on ESG. ESG is an upcoming field. India has a lot of opportunities there. Why I'm saying this is because you go and read the Economic Survey of India 2023-24 report. Out of the 13 chapters, there is a chapter separately dedicated for climate, which means India, both at central level, they know the problem, they are managing at its own case, and chartered accountants per se can give reports on ESG. See, when you want to attract money from European market, they say, if you want to attract the best money from Europe, which is around 73 trillion, we are competing for 73 trillion amount. And our economy is how much? 3 trillion. So if you want to get that money from Canada, USA, Europe, all these areas, you need to have the best market here. One of the market which they would eventually demand is an ESG or a credit neutral markets. How much are we adopted to it? That's when India is also very serious about it. There are some industries which would eventually benefit. Some industries which have already have been given favors are renewable energy sectors. Sectors which do not consume plastics, all of these. So there is scope 1, scope 2, scope 3. There are a lot of these goals which are there. Chartered accountants tomorrow can be involved to give reports, certify them, help the companies to manage the cost. Tomorrow when suddenly an SDG or the goals have to be adopted, how is that the cost has to be still maintained but you still have to adopt yourself to the newer ESG norms. Okay, so these are the other segments which chartered accountants can do. All the three have done wonderful job. If any of you have any questions, they are more willing to answer. I would leave the house open for students to ask any questions. In case they have none, we will ask questions. Okay. As an homework, you all can go back and study these 3 topics. These are very interesting and follow them. Post-qualification, it will just still help you.
Thank you so much, sir. I call upon CA Shripad sir and CA Yusuf sir to present the token of gratitude. Please give them a huge round of applause.